Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Herriage.
Welcome back to Uncontested Investing. I'm your host, Tim Herriage. Thanks for coming back. Today, I'm with my buddy, Jawad Dashti. Jawad, thanks for coming, man. So, just start off, tell the audience a little bit about yourself.
Well, I've been in real estate for about 10 years. I don't find myself to be that great at it, but I figured that if you make as little mistakes as possible, that alone makes it work out pretty well.
Started out as a plumber, correct?
Yeah, I was in construction and I was working for all these home flippers and everybody right before the 2008 bust, and everybody's bragging about how much money they were making. So I figured if they could do it, I definitely could, because I knew all about construction.
And how'd that work out for you?
Well, I learned that knowing construction doesn't do anything at all with real estate. It's definitely a numbers game. But at least I had the get up and put in some work attitude. And to me, that's what's paid off the best.
Well, you've always been one of those people I kind of admire here in the DFW area. Every week we start off with the bottom line up front, the bluff. When I was in the Marine Corps, we used to brief generals, and they would always say, don't bury the lead. Get the most important information out and shared in case the general has to get up and leave, like mortar fire or something like that. So what I'm going to do is I'm going to give you up to 2 minutes, share what you think people should be thinking about in today's real estate market, maybe what you think they shouldn't be doing, what they should be doing, or what you're doing in order to continue to grow and also protect yourself. So bottom line up front, go.
Well, I guess the best advice that I could give right now is that we're going through some very different times, which seems to happen about every 8 years in the economy. And that's when the most money is made and when the most money is lost. The people that win the game are the ones that pay attention. So I just tell people, look at the economy, look what's going on right now, all the transitions, because everything's changing. And if you can try to determine where things are going, you just really need to think about 3 to 5 years ahead of the game. So as you've seen, office is changing in a lot of places and converting into multifamily. A lot of multifamily is converting into multi-use. If you just kind of notice which way that neighborhoods are growing, how real estate is changing, and you can just be like a little bit ahead of the game, I think it'll pay off for you. But it's a good time. Inflation's taking off, assets are growing. I definitely would say that I have no concern being in the game. And for the people that think that the real estate market's going to crash because of interest rates or whatever, I still think that mortgage rates are low, really low compared to the average. And look, if the whole world went bust, we're all kind of screwed anyway. So just keep playing the game. And I feel like that if you just commit to it, put in the work, and try to think a little bit ahead, you're going to do well.
Man, that's good stuff. So one of the things that stuck out the most to me in kind of following you on social media the last couple of years is the way you play the tax game. Where did you learn that?
Really, I can't give credit to any books because I don't read books at all. It's funny, I can read stuff on my phone all day, but reading a book, I'm allergic to it. But really, it's just going to investor meetups, watching shows like this, believe it or not, a lot of content from shows like this, REI groups, and I just overhear conversations. When I see people that are smarter than me talking, I try to eavesdrop on it, and I won't hear everything that I need to know to fully understand the game, but I can hear enough to hear a word like 1031 exchange or some kind of phrase, accelerated depreciation, and then I just go home and Google it and research it nonstop until I feel like I'm a master at it. And I always try to tell people it's kind of like trying to play Monopoly without reading the rules. How do you expect to win a game when you don't know the rules? And so many people do that. The IRS, people talk trash about taxes all the time, and I love taxes, and I love them because I don't really have to pay them, and it's because the IRS and the government makes these rules to manipulate the economy. And so they're basically paving the way for what they want you to do, and paying a tax is a penalty for not doing what they want. So if you play the game, you can make a lot of money and not have to pay them anything. So that's the way to do it.
Read the rules. So you own Precision Plumbing.
Correct.
You own, I know, multifamily. I know you own commercial. I know you own a chicken coop, which I saw the other day.
It's under construction.
It's under construction. And you own a bunch of single family. Can you just like take a minute and let's start at the beginning and maybe on a high level cover kind of how you progress from venture to venture?
Sure. I would say with the single family, the first deal that I got, I was really just kind of winging it. And luckily, like, it went very well for me on my first deal. But I purchased a single family deal. Luckily, it was a lipstick one and I didn't get too big over my head on the deal, but bought it, painted it myself, slept in it for like 5 nights while lipsticking it. Rented it Section 8, which I didn't know how that worked, but I figured it out. And was getting, this is in 2010, so no, 2012. Perfect time to be getting into real estate. Everything just crashed. Price hadn't really came up yet. But I'm just getting really good rental rates. So figured I would try to do it again and realized that amazing deal wasn't that easy to find. And so I tried a short sell, which I didn't know what it was. Just like hearing rumors from people on ways to find properties. And so I bought a short sell. It had a guarantee that it was going to look like the pictures. It did not. They said they were going to give me $5,000 if it didn't look like the pictures. They did not. And luckily, a buddy of mine had just quit his job to start his own business in automotive. So he was still a little slow, and he was like, hey, I can help you paint and stuff. So that gave me, it's not like he knew anything more about construction than me that had already been in it, but it gave me the motivation to know like I wasn't doing it alone. So me and him painted this house and replaced faucets and all that stuff and rented it out, and that did really well. And then on my third one, I went into like a big construction, which I thought was big at the time. It just had some sheetrock holes, but like every friend that I knew walked in the house and was like, oh my God, you shouldn't have bought this house. And then when it worked out, that's when I learned the more I hear that, the more money I make. But after I had done my fourth house, the housing market changed. You went from being able to buy any house in Dallas for $30,000. They were like skyrocketing because the market was coming back. I didn't know that. I just got into the market. So I started looking around. I'm like, where can I still make this same kind of money without having to fight over houses and still get the same returns? And at the time, I didn't even understand about equity, only cash flow. And I didn't know what cap rates were or cash on cash returns. I hadn't figured any of that out yet. I was just merely knew that if I paid for a house, how fast did I want my money back? And my goal at the time was 3 to 5 years. And that's the total purchase of the price in the 3 to 5 years. But then I looked and I saw condos. Man, you could buy condos over here off 635 in Aldelia, which was not the best area. But I was buying them from wholesalers, which I didn't know what a wholesaler was. I didn't even know I was buying them from wholesalers, but I was buying them at the time for $5,000 to $10,000 a piece and renting them out for $900 a month. That's an amazing return.
Right.
I didn't even know that was an amazing return. Like I was like, okay, this works for me. So I bought 10 of those, which took time because I'm doing all the rehab myself and, buy one, buy two, paint them, lease them out, all that. So 2 years goes by. Next thing I know, these condos shoot from $5,000 a piece to $70,000 a piece because people found out that there wasn't affordable housing in Dallas, started buying them all up. So then I found some apartments near the Cowboy Stadium. Great area, terrible housing all around it. It was, the Cowboy Stadium, for those of you who don't know, it was a mobile home park that got scratched. So really wasn't the best area, but the location was great. So I seen where I could buy these at the time for, I believe, $16,000 a door, which now they're trading at $150,000 a door.
Right.
And that was 2016. And I didn't know about 1031 exchanges. And I wasn't leveraging and getting loans at the time yet. So I sold 4 houses, took a huge tax hit, and used that money to buy the apartments. I put $7,500 per door into them with a total of $24,000 a door, and then sold them just recently for $100,000 a door during COVID.
Decent return.
Yeah, great return. And so I wanted to replicate that.
Right.
And multifamily is way too hot right now. When I first bought my apartments, it wasn't cool. Like, you were considered a slumlord and kind of like a lower end investor to buy apartments at that time. But now it's like the hottest thing you could do.
Right.
So during COVID, when everybody was saying don't get into commercial, it's failing, I tried to scalp the bottom and tried to buy while everybody was panicking. And I purchased 23 commercial properties during COVID. And now I'm winging it, which is working out, but it's an educated winging it.
Right.
I'm doing my research, but I totally don't know 100% what I'm doing. But it's working out very well.
Well, that's awesome. So when we come back, we want to talk a little bit more about tax games, reading the monopoly rules, multifamily condos, Google, Section 8, and I want to learn a little bit more about your capital stack when you get started. So stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm Tim Herriage, your host. Today, I'm still with my buddy, Jawad Dashti. Jawad, we've got a lot to talk about. The first house you bought, you Section 8, you put it on Section 8. Now, did you get like a big inheritance to pay for that house? How'd you buy it?
So in 2010, I was completely poor. Well, I mean, like, always had to worry about what I was going to eat and how I was going to eat. By 2014, my plumbing company had been doing very well, and I had saved up $250,000. I went to go switch banks and went to Chase Bank, and a banker there was like, "What the heck are you doing with this money? Do you not understand how inflation works?" And I was like, "I don't even know what that means." And so he explained inflation and how my money is losing money by just sitting there in a savings account. And he didn't tell it to me out of his own good heart. He was trying to sell me some bonds.
Yeah.
But basically, he told me what I needed to know. And at the end, he was like, "So you're going to buy some bonds?" And I was like, "No, I'm going to go buy some real estate." And luckily, I at least was able to comprehend that real estate could beat that inflation market.
So now, 10 years later, when you go buy 23 commercial properties in a year, are you still paying all cash? Are you using leverage? How's your capital stack changed?
It depends, because it's always, you know how it is.
Yeah.
Money's always moving. I've got 7 figures in my account right now. That's not typical. It's always up and down. I remember there's been times where I hit below 6 figures and be freaking out. But that's because you want to always keep your money working.
Right.
And so if I've got excess money, I'll purchase a property, I'll rehab it, and then I'll leverage it out, go find me some long-term debt. If I'm short on capital, then I'll use a hard money lender, rehab it, rent it out, and then get the long-term debt.
So it's very interesting. Here we are 10 years later. You've done, I'm guessing, tens of millions worth of transactions, 100 million, a lot of transactions.
Yeah, a lot.
And you still will use a private lender / hard money from time to time.
Yeah. I know people talk about private money. I find private money to kind of be a pain in the butt because it's too personal.
Yeah.
And so they want too many details. Can it walk the property? No, that's too hard. Can't scale that way. Like, I don't want to have to write a thesis every time I want to buy a property. So I don't have an exact system in how I do each one, but definitely, yes, I like to leverage it out.
Well, you're managing your business. I mean, if you got too much cash, you just spend the cash. But yeah, I find that most of my clients are that way. Condos. So I remember I owned a property at 8110 Skillman, Unit 2003.
That's wintry.
Yep, Windtree Condos. I was in the lawsuit with the board and Fidel Jenkins.
I was too.
Were you? Yeah. I was on the board at that time. I was the one that actually had to go to all the depositions on your behalf. And that soured me on condos so bad. But I remember I bought that condo for $5,000. And it was because I'm sitting there and the guy goes, well, make me an offer. And I thought, I'm going to give him an offer, but I don't want it. I was like, $5,000. He's like, it's yours. And I'm just over here like, what? But it was a great cash flow property. But I had such a bad experience on the board. It's how I formed a good relationship with auction.com really is. I was like, auction this thing off. I'm done. But it did sell for like 15, 20,000 a couple years later.
Yeah, I bought those for 5,000 pieces. I actually had one guy that tried to sell me like, I think 50, 60, 70 units for $5,000 a piece at one time. And man, I just didn't have like the capital.
Right.
And I didn't understand leverage at the time, but that would have been great.
But you had to be brave to go into that condo market because I went in and I've been doing it for 10 years and it still bugged me. You're a year or two into it. I mean, what other than the price, was it purely like a return calculus? Was it you were just looking for affordable housing? What pulled you towards those condos?
A little bit of everything. So I've always tried to buy the most affordable properties. So for part of my business plan on any of the housing stuff, not the commercial, is the cheapest properties are always going to be the cheapest properties. So if I go buy a house now in a not desirable area for $20,000, even if inflation drops up 250,000, it's still going to be the cheapest area. And so it gets 10% harder to lease during like a great economy like what we have now. Despite what people say, I think this is a great economy. But during a bad economy, I think that they lease 1,000 times easier, and that all the beautiful areas like Frisco, Plano, things like that, that's where people get foreclosed on and downsized. So I feel like it's the safest bet.
So earlier you said relatively low interest rates. What made you say that?
Well, I've grown up knowing a lot of doctors and people that I remember when, before I was even in real estate, when they went down to like 6-something%, and doctors were freaking out and they're like, I remember I was happy to pay 15 for my house. And I understand when people say history always repeats itself. So I'm real big on going back like yourself and looking at graphs and analytics. And I go back for 50 years, things like that, and we'll try to see like what it was. And so on interest rates, I go back and, rates have been as low as we just had them, where they're at like, 3%? How low they go? And then they've been as high as like 18%. But if you look at the average throughout time, the average is about 7% throughout.
7.75.
Yeah, throughout the past 50, 70 years, something like that. And so I tell people all the time, like, I'm not even going to think about interest rates. I don't care what people say about interest rates. I'm not even going to think about it until we hit that number.
Right.
Will it even cross my mind if I'm concerned?
Well, recently I've been reading a lot of articles where it's days on the market up 50%, days on the market up 100%. And you read into it, it's like, yeah, it went from 3 to 6. Like,
yeah, and the average is 60 days. So
right.
6 is still really well. That's still 90% better.
It's the 10% of the average. I mean, yeah. So what, as we transition or turn a corner, you're not really looking at it, but what do you think in the next 12 months? Where are you going to be focused? Is it multifamily? Is it commercial? Are you land development? Is Jawad about to just sell everything and go back and raise chickens? What are we doing here?
A little bit of all of it. So I am trying to pick up some liquidity because I do think that there are going to be opportunities to be bought. And I've never been one to play in the stock market, but I am going to try to scalp some of that stuff while it's low. But I've been doing a lot of land plays, and that's really been working out for me. And I really still don't understand land that well. but I understand what land's worth, and if you buy it cheap enough, then you can make a lot of money.
Now with the land, earlier you talked about kind of cash flow, being real estate rich, cash poor. What's your land cash flow strategy?
Well, I've tried to determine a lot of them and came out with there isn't really a good one. So RV parks is the best that I've seen anybody do. And I don't know that you'd even call that a land strategy, but maybe if you were buying the next place after Prosper and you knew you were going to have to hold it for 10 years, but you're going to make like a whole bunch of equity, then that would be a good play. But what I've just been doing is places that are already kind of hot. That's how I got my personal ranch. I was calling around just anybody on CAD who had over 20 acres, called a guy who had 106 acres, said, would you sell your ranch? He said, yes. I said, how much? He said, won't take a penny less than 3,000 an acre. Pulled comps. Cheapest I was seeing was 12,000 an acre. The going rate at the time was about 18. I bought it, did some infrastructure and stuff, sold off the back acreage, and by the time I was selling it, it's now going for 50,000 an acre out there. And so I had millions in equity. And by selling off a little bit off the back, it paid and gave me my whole land for free, my house for free, my shop for free. So I learned there's some money to make there. It does take time and does hold up capital.
Yeah, so free land is another thing I guess we got to talk about. Read the rules. It's an interesting conversation. You seem to be one of those, when you hear something, you go out, you research it, you read it. Any resources or tips or tricks you can offer?
I read every news article and I take them all with a grain of salt because everybody's kind of got their own reason why they're putting out whatever they're putting out. But I just read them all, and you'll read things about electric car this and oil that and the economy and interest rates, and I just try to determine what I think the bigger picture is and where it's heading. And like I said, I just try to be like a foot ahead of the game. With all the IRS stuff, watch a lot of videos like this, try to learn all that stuff, and then I put it to practice because I talked to a lot of people. Hey, do you know about 1031 exchanges? Everybody said yes. I'm like, have you ever done one? Everybody said no. Like even people I knew that had like $20 million portfolios. I'm like, why haven't you done it? And they're like, because I don't know anybody that's done it. And I'm like, well, that's the same reason why I haven't.
Right.
So I was like, screw it, I'm just going to do it. And I did. It went well, and I did a whole lot of them, and started exchanging out during COVID all my like D-class properties that were single family. I sell 2 or 3 at a time and 1031 them into a B-class commercial property. And I find that it's a lot more relaxing.
Well, we're going to talk about that and more, including the Money Minute, when we get back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-vest.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing at rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Herriage, your host. I'm here with Jawad Dashti. Jawad, we've talked about a lot, and I've got a lot of questions for you, but first, the Money Minute. The Money Minute is a segment we do every week where it's 60 seconds, you're speaking directly to the audience, and imagine it's the only 60 seconds of advice they're going to get all month. Like this is it. This is the only thing they get to hear. Some people go back to when they were starting and kind of speak to their younger self, but get ready, 60 seconds now.
Really, the best advice that I could give is you just got to do it. There's so many people I meet that have been sitting on the sidelines, learning everything about real estate, knowing more about it than myself, getting all this education, and they really haven't done anything with it. Now, that doesn't mean jump in blindly. You definitely want to get out there, do your research. Like I said, watch shows like these. Investorpedia is a good website where you can learn a lot of terms out there. But at some point, no matter how much you know, if you don't put all of that knowledge to work, you're not going to be able to do anything. And that's the biggest mistake that I see people make. So you got to go out there, you got to get the knowledge, but you got to put in the work. And no amount of knowledge, no amount of money is going to beat that work. You have to be able to put in the effort, especially on your first deal. So if this is something where you're just beginning or you've been doing it for a little while, that's the most important part.
Man, that is good stuff. So here we go. Rapid fire. Put into practice. You said it a couple times. You just covered it in the Money Minute. What gives you the ability to go ahead? I mean, you educate yourself, but then you act. What is it about that? How do you do it?
Well, the biggest thing is I like to think big, but I meet a lot of people who think big and then act big. And sometimes they act a lot bigger than what their wallet or their mindset can handle. I don't want to be that guy. I've seen a lot of people that I thought were very smart and educated fail. And so I researched what I'm going to do, and I went from $5,000 properties to $50,000 to $500,000 properties, and now I'm trying the $1 million properties. But I find a great deal. I'm willing to take my time, and I find the one that's the most safe bet, because if it's something new and I'm not 100% educated on it, I want to know that there's room in there for errors.
Right.
And so I purchase a deal like that. That's the safest bet that I can find. And I just go through it, and instead of trying to rush it like I do a lot of the stuff where I kind of feel like I've mastered things, I take my time. I ask a lot of questions. If I have to deal with the city, I ask a lot of questions. If I have to deal with contractors, I ask a lot, and I try to become as educated as I can and try to be a master at it, so that way I'm more prepared to make better decisions on the next deal.
So what's the most money you've ever made on one property?
I would say when 2 years ago I sold my apartment complex by the Cowboy Stadium, I sold it for $2.2 million. I made, I believe, $1.5 million profit on the deal. So that would definitely be the biggest deal and the biggest profit that I've made. The second biggest deal would be the one that I just closed yesterday, if you saw that.
I did see that. What's the most you've ever lost on a property?
To this day, I have not lost a penny on any deal.
Oh.
But I do not do like a lot of people, and I don't go for quantity. I always go for quality. So I know a lot of people that do 200 deals a year, 300 deals a year. I don't. I know if you watch me on social media, you think that I do everything like senseless without thinking about it, but that's not really the case. And plus, I got in a really good time in the market, and if I feel like I've over rehabbed or something like that, I don't mind to rent it out for a year and then sell it. So there was one house where I thought I was going to lose money on it, and I was like, you know what, we have 9 other houses in the pipeline. We remodeled those, rented them all out, and then I forgot about the house. And then I did my property taxes and was like, oh, forgot I own this house, and went and renovated the house and sold it at the time. And by then there was enough equity that actually ended up making like $20,000, $50,000, something like that. So
What's the deal that you didn't buy that you should have?
there's a lot of those, especially when I first got in. I wish I would have bought everything that I looked at. But most importantly, there's actually an apartment complex in Dallas where at the apartment's bottom, like when they were just not doing well, over in the Gaston area, which at the time was kind of a little rough neighborhood. And
it's not now.
Now it's a very nice area. But I could have bought those, I believe, for like $15,000 a door, but they were like full gut to the studs, and at the time that intimidated me.
Right.
And now I won't even drive that way. So I literally reroute around the entire neighborhood.
Yeah, there's some houses like that in my past that. What do you think about people that? What advice do you give if someone gets into a deal and once they realize it's not going the way they wanted, maybe cutting bait early or making the right, being unemotional during due diligence?
So I'm always unemotional during due diligence, and I actually find that only twice have I ever just really felt like I needed a property,
right,
and I purposely didn't buy it for that reason. Because even if it still was a good deal, I knew I was going to make bad decisions later on over that. There's an office right down the road in Addison for $14 million that I have the money to buy, and it is a beautiful building. And I realized my ego was about 90% of wanting to buy that, and I'd just like to see my company name on there. And I was like, for that reason alone, like I don't even want to touch it. But I would definitely say that if you really see yourself, where you're eating it on a property, dispose of it, get yourself out, because time's money. And, it took me a long time to learn that time is more valuable than money, because you can spend a year trying to squeeze $5,000 out of a bad deal, or you could sell it, take your $10,000 loss and go make $10,000 100 times during the same amount of time. Right. So I'm real quick about cutting my losses, and there's a lot of times where I buy a deal and I think that I'm going to make a certain amount of money, and then I realize it's not going to be as much as I thought. And whether I sell it owner finance, rent it, or just slap it on the MLS, sometimes I just cut my ties with it.
It's important. I'm in a deal right now that I'm thinking, I may need that Rockwall historic thing. Maybe time to just sell it for $1 million and move on. You still own a plumbing company?
Yeah.
So are you consider yourself an employee, self-employed, business owner, or investor in that company?
At this point, an investor, because I do not do anything with it. Our friends message me all the time. They're like, hey, how much is it to do this? I'm like, I have no idea. Like, no clue. Here's the phone number.
It's kind of like asking for my help on a loan file. It's like, oh, yeah.
Yeah, that works out well.
Okay. We do loans. All right. So what about the single family business? Do you self-manage those?
I do self-manage all of our properties. I have tried multiple property management companies. I have not found success with any of them. I don't mind paying fees at all, because like I said, time is valuable. And I went in with the mindset that this will free up more time for me to use the knowledge that I have to make millions for the hundreds that I'm paying. That did not go well, because one of them I fired the first day they started managing it. One of them, the longest one, has lasted probably 8 months, but I, even on my apartment complex, went from 100% occupancy to 60% vacant within the first 5 months. And everybody in my office was like, we need to fire them. And I was like, well, let them do their job. Maybe they're doing some stuff where they're going to recycle and give me better tenants. No, it just got worse and worse, to the point to where I just had to take over. And they were telling me the reason why they couldn't lease it is because my properties weren't nice enough. But I got it back to 100% occupied within 30 days. So.
Right. So if you had to make a decision, and people always, one of the first things people will ask me is, how many houses do you own? And it's always funny, because I literally don't know. And it's not that I don't know, because I have so many I just don't know. I just don't take time to count that.
Yeah, because I'm sure it goes up and down and changes every day.
For me, it's not how many, it's how much, right? What's that net worth look like, and what's that cash flow look like? Which do you use? Is it how many, how much, or is it something else?
I actually want to compliment you on that, because you're the only other person I've ever met where I only go by my balance sheet.
Yeah.
And I do that because that's what billion-dollar companies do. And I tell people, why are you trying to be smarter than a billion-dollar company that it's the owner is smarter than you, who hired people that are smarter than you to come up with ways to do things? And if that's how they do it, I'm not going to try to beat the system. And I know a lot of people who are like, I want to own 100 doors. And so what they do is they go out there and they're like, all right, this is taking too long. And they buy a lot of junk that
Right.
doesn't cash flow, has no equity. They can't lease it out. I've watched people buy really bad stuff because they set a goal. My only goal is to make money. And so that's all I watch. It's literally the only thing that I watch is my balance sheet and my net worth. And as long as it's going up, I feel like I'm doing a good job.
I think that's a great place to end. Do you have any parting thoughts, parting shots?
It's all a numbers game. Please be good at math. If you're not, have like a calculator. I have 3 of them on my phone. I have a mortgage calculator, a regular calculator, and I have smarter people than me around me. But it's really not that hard as long as you're willing to meet great people like Tim, network with people, get educated, and most importantly, put in the work.
That's right. So if someone wants to connect with you, do business with you, network with you, how do they find you?
You can email me at jake@toodashproperties.com. That's TOODASH properties.com. Or find me on Facebook, Jawad Dashti. You're going to see my business page and my personal one. If you don't know me, please follow the business one.
Well, man, thank you for being here.
Yeah, thanks for having me.
It was a great show. Thanks for coming by. We'll see you next week. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.